Welcome to Explainomics from MarketWatch, where we explain everything around the intersection of business, finance, and everyday life. Today we're talking about financial independence, and specifically, is real estate still a good way to get there? Financial independence is part of the FIRE movement, which stands for Financial Independence Retire Early. And the traditional way to FIRE has been live frugally and invest so you can live off your earnings and not have to work. One way people invested towards financial independence has traditionally been real estate. But with home prices near records and high mortgage rates, a lot of you are wondering, is real estate still a good way to get to financial independence? Of course, your real estate agent is going to say, stop wasting all this money on your rent, buy a house instead. But it's their job to push you to buy a house, right? I reached out to MarketWatch reporter Arthi Swaminathan. She is the real estate reporter covering the ins and outs of the housing market every single day. Here's what she had to say.
Real estate is turbulent right now, but it's still a really solid path to financial independence. Real estate has always appreciated over time. Even during periods when the market crashed, it has recovered. Over a 40-year period, home prices have risen by over 280%.
But what about market downturns? Many investors are afraid of getting the timing wrong and then getting stuck with the opposite of financial independence, a mortgage that's gone underwater.
So as with stock market investing, timing is everything. You want to have a long view when you invest in real estate, and you don't want to sell when the market is down. Have a look at this chart. The long-term trend shows that home prices rise over time. There was a significant drop in home prices last May when mortgage rates shot up, which explains this big dip you see in 2022. But look back to the period after the Great Recession, when home prices managed to recover.
Another important part of the equation is taxes. The more taxes you pay, the less you have for your early retirement. But according to Arthi, real estate investing has some unique tax perks.
There are plenty of tax deductions to take on your rental property. For instance, you can deduct the interest on your mortgage, your insurance, your maintenance costs, and depreciation. Real estate can also be a great passive income source. After all these deductions, you might find yourself collecting rent from your tenants tax-free.
These are some of the perks that come from owning and renting your real estate. But it gets even better. When you decide to sell, you can do that tax-free.
And then there's the 1031 exchange. The 1031 exchange allows you to swap your real estate investment property for another investment property. So if you're a landlord and you're sick and tired of maintaining a property in some far-off place in the country, you can swap it out for an office building, a retail space, or something else that's closer to you.
The biggest hurdle for real estate investors is that dreaded down payment. Not everybody has the cash for that. But Arthi says there is a possible solution to that.
You can start small with real estate investment trusts called REITs. REITs are a little bit like investing in the stock market, but you're pooling together your money to invest in a portfolio of real estate. And REITs are traded like stocks on the New York Stock Exchange. Another option is what looks like crowdfunding for real estate. Two options are companies like Fundrise and Diversifund, which are platforms that give you real estate exposure for small dollar amounts. There are so many types of real estate that you can purchase and manage. And one important thing to consider when you're buying real estate is location, 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 as real estate agents will tell you. Do your research and find something affordable. Don't necessarily go for the most expensive markets. Find something that works for you and has a lot of potential for growth.
At the end of the day, there are many roads to financial independence. You can invest in the stock market. You can go on Etsy and build your business. You can create an app and fill a need that people didn't even know they had. And in that vein, you can also invest in real estate if you're interested in that. And it might seem like a slow process, but it's a solid path of continuous growth to financial independence. For more videos from MarketWatch and Explainomics, don't forget to hit the subscribe button and keep checking back on the Explainomics playlist. I'll see you next time.